Okay, good morning, good afternoon, good evening, everyone, from wherever you're joining us from. So a warm welcome back to our bi-weekly webinar series under the e-mobility support and investment platform for Asia and the Pacific. We're very excited to be here again after the mid-year break with new webinars for you. So my name is Johanna Siliakus, and I work for the Transport Sector Office at the Asian Development Bank. And we are very happy to kick off this webinar series or this quarter's series with today's webinar, which is called Monetizing Emissions Reductions from E-Mobility through International Carbon Markets by Guillaume Remy. The webinar series is, Tina, you can, yeah, thank you. The next slide, thanks. The webinar is, and the whole sessions or the series is organized under the umbrella of the e-mobility support and investment platform for Asia and the Pacific, as I mentioned, which we in short call the e-mobility platform. This platform aims to build capacity and support the scale up of financing of e-mobility initiatives. And the platform is operated by ADB, co-implemented by UNEP, and co-financed by the Global Environment Facility, the GEF. Next slide, please. And if you would like to join the e-mobility community under the platform in order to stay up to date on the platform's activities, please fill in the assessment survey where you can leave us your contact details in case you have not done so already. The QR code to the survey is now available on the screen, and we'll share a link to the survey in the chat as well a bit later on. And next slide, please. So we are currently developing the whole kind of series for the next couple of months. Our next session will be taking in 2 weeks' time when we will hear from Mr. Andy Chun from Very Words. He will be presenting this Korean-supported project that focuses on electric two-wheeler assembly and battery swapping. And we'll also share the registration link to that webinar in the chat a bit later on. So for now, I will hand over to Tom Fleming from our implementing partner, Integrated Transport Planning. He will be moderating today's session. So Tom, over to you to guide us through the rest of this webinar. Thank you.
Thank you so much, Johanna, and hello, everybody. Welcome back. To begin, I will start with a few house rules. So microphones will be muted unless you are invited to speak, and please use the Q&A function at the bottom of your screens if you would like to ask any questions of our presenter Guillaume today. I will pick them up during the course of the presentation and pose them at the end through the Q&A. So please use the Q&A function there rather than the chat. Next slide, please. Perfect. Okay, so now let me introduce our speaker for today's session, Mr. Guillaume Remy. Guillaume is the co-founder of Zoloka, a company that accelerates the transition to e-mobility through international carbon markets. With a background in banking and project finance, he has advised on large-scale transport infrastructure projects across various sectors globally. So without further ado, Guillaume, I will hand over to you to take us through your presentation.
Thank you, Thomas. Trying to switch my video on. There you go. I think everybody can see me.
Yes, all good, Guillaume.
All right. My screen sharing properly. Let me switch off this.
Yes, looks good. Looks good. Guillaume.
All right, super. Thank you, Tom, and good afternoon, Asia and the Pacific, of course. So the introductions have been made, so let me delve right into it. So today we're going to talk about the exciting world of carbon credits for electric mobility. And let me start with a bit of a sad constatation, which is that at the moment, e-mobility represents virtually peanuts in the world of carbon credits. This comes from the World Bank report that they publish annually on carbon credits. It represents the registrations on the voluntary markets. And as you can see, There's nothing about transportation or e-mobility in there. Maybe it's included in the fuel switching or in the others category in purple, but as you can see, it's probably less than 1 or 2% of overall registrations of carbon credits worldwide. Why is that? I mean, two main reasons. The number one reason is it's difficult to achieve volumes of emission reductions in the world of electric mobility, which make it worthwhile to register carbon credit programs. And I'll explain why in a minute, but that's mostly because of the cost and time required to register a program in relation to the volumes of emission reductions which you can achieve through such a program when you develop an e-mobility activity. The second reason is that up to a couple of years back, e-mobility was virtually non-existent in most emerging markets of Asia and the Pacific and worldwide for that matter. So this is really a new phenomenon. And that explains why transport to a large extent has not really been represented in carbon credits. At the moment, the market is mostly dominated by projects in the world of energy, replacement of cook stoves for clean cooking, and nature-based solutions such as forest preservation, mangroves, etc. So what are carbon credits? We're not talking about the same things when we talk about carbon credits, and even though they all represent 1 ton of CO2, they're actually not the same product. And that's because a carbon credit is a construct of a certain set of rules and regulations. And the value of a carbon credit is, on the case of voluntary market, in the eye of the buyer. On the case of the compulsory market, it's basically dependent on the rules and regulation that apply to that specific market. How high is the carbon tax? What are the targets that are imposed on companies that are subject to such regulations? There are 3 main categories of carbon markets. The first one is the compulsory markets, which you have at national, regional level. And they are typically your cap and trade system, like we have in the European Union, in California, in a series of provinces in Canada, in Australia, and about 50 markets around the world have similar systems in place now. And the number is growing as more and more countries put in place such regulations. So this, again, depends on what the rules and regulations of that particular markets are, and they're all different. Next to that, internationally, when you're talking about international transfers of carbon markets over the past decade, that market has been dominated by the voluntary market. So what is the voluntary market? It's basically just a set of transactions between, as the name says, a buyer and a seller of carbon credits, emission reductions, on a voluntary basis. So the buyer is doing it and is buying the credit because it wants to compensate the emission reductions from its own activities. And the buyer can be just any corporation or any individual around the world. So this is typically the type of credits that you buy when you, for instance, purchase an airplane ticket, and the airline offers you the possibility to cancel the emissions of your flight. That's typically what you buy. The third category of market, and that's actually the original one, is the international regulated markets, where there are transactions between countries, and they are regulated by international agreements between as much as 200 countries around the world. So this is historically your Kyoto Protocol from the 1990s, which is now defunct, and it's now being replaced by the exciting new possibilities that are arising under the Paris Agreement, and specifically Article 6. So the new name for the CDM is ITMO. That stands for Internationally Transferred Mitigation Outcome. It's just a fancy name for the same, basically the same concept, but you have to understand that this market is now different to a certain extent. So what are ITMOs? Because I think you're going to hear that a lot over the coming years, especially as we near the time of the conference of the parties in Baku in November. The ITMO market basically allows 2 countries to trade with each other And the benefit for the buyer country, as opposed to the voluntary market or the CDM market, is that it is allowed to purchase ITMOs from other countries as a way to meet its own commitments under its so-called nationally determined contribution under the Paris Agreement. So to summarize, every country that is a member of the Paris Agreement has set for itself a set of targets for emission reductions by 2030. And it is allowed to realize a portion of those emission reductions abroad by supporting activities that occur in third-party countries, rather than doing it on its home basis at possibly a higher cost. So that's the benefit. And obviously for the host country of the activities, that's a way to generate additional revenues and accelerate the transition to clean energy, clean transportation, etc. Just a few price indications, so you understand why we're saying that those are completely different products. The prices are very different depending on what you're talking about. So the prices can range from a few $cents to, I think, upwards of $200 in Switzerland for some projects. The differences are basically due to this different set of regulation that exists, and which basically put a different value on the carbon credit itself, even though, again, they all represent 1 ton of CO2, but they're not the same product. So it's important when you, as an electric mobility player in Asia and the Pacific, are trying to develop an activity and are trying to secure carbon credits, that you understand which market you're targeting. Because the methodologies might be different, the rules might be different, the buyer might have certain requirements, and there are a ton of subtleties here. If you don't meet the requirements exactly, then your approval process is going to last twice as long and be twice as costly, and you're going to get a lower price for your emission reductions. We think at the moment the main opportunity for emerging markets of Asia and the Pacific lies in the green box. So that is what ZeroCar focuses on at the moment. And that's because if you want to sell your emission reductions at a good price internationally, that's the way to go, in spite of the additional hoops which you need to jump through if you want to go through that market. Just to illustrate what I'm saying when I say the prices fluctuate drastically, so you can see that it's still a very immature market. So you have a lot of booms and busts depending on changes in the regulations, and the caps for are changing on an annual basis. The rules are changing. Sometimes you have bridges between different markets, so the voluntary market and the international regulated market, like ITMOs, at some point might communicate with the national regulated market. And all this set of factors makes the prices go up and down, just like on the stock market, but with the additional uncertainties that are attached to these markets, because you're basically trading a virtual product, the value of which is really underpinned by what's behind the carbon credit itself. So those are the prices for the compliance markets. As you can see, on the voluntary market, you are much lower. So you're ranging between a couple of dollars to 20. With some exception, you can go above that, typically for very small projects, but you are at a much lower price point. What is the process for getting a carbon credit program approved? It is quite lengthy and difficult. I won't hide it to you. So you have a number of steps which you need to go through. Those steps are pretty similar across all the markets and standards that you can sell your carbon credit programs to. The subtleties will be in the registration rules and the methodologies and the subtleties that each buyer has as requirements. But basically, you formulate your program document, you get it verified by an independently certified verification entity. Then you get your program registered, and then you start implementing your activities which generate emission reductions. Only after a certain period of time, typically a year, you produce a monitoring report. You show, okay, I have achieved so many tons of emission reductions. You put that all in a report. You again need to hire a verifier, a sort of auditor that will verify that what you put in your monitoring report is in line with what actually occurred on the ground. And then finally, you can issue your carbon credits and secure the benefit from it. Typically, the carbon credits, the crediting period is 10 years. And that's basically the process which you need to go through. Just to give you an idea of the cost, up to stage 3 registration, you're talking about maybe $100,000 to $150,000 just to get your project registered. And after that, on an annual basis, maybe $40,000 to $80,000, plus the actual monitoring costs, which fortunately are pretty low in the world of mobility, as we'll go and explain in a minute. If you need to create or adapt a methodology which does not exist at the moment, meaning you're trying to create a new type of project which has not been done before, and you need to tweak the methodology, you can add another 2 years to your timeline, and you can add another $100,000 to $150,000 to your cost. If you don't need to do that, you're talking 2 to 3 years before you're seeing the first revenues from your project. So you really have to think about it in advance at the moment when you are planning your e-mobility activity, and not once you're operational, because then you're already too late. Some of the best practice principles of carbon markets, again, they are pretty similar across the entire spectrum of markets and standards, but your activity needs to lead to real change on the ground, and you need to be able to demonstrate that you have achieved emission reductions, which means it needs to be measurable. And the way you measure it is by comparison to a baseline. And that's where a lot of controversies occur, because how do you calculate what would have occurred if the carbon credit was not made available? So you need to find a reference point. So typically for forests, you would find another forest which is not covered by the carbon credit program. And you say, okay, you compare the reference forest and the forest that is covered by the program, and you calculate the difference between the emission reductions of the two, and that's how you can calculate how many credits you are allowed to issue. Another issue is the issue of permanence. You need to be able to demonstrate that your carbon credit, that your emission reductions are permanent. So that's typically very difficult for reforestation projects, because if you secure your forest and protect it for a period of 10 years, but it all goes in flame at the end of the period, you basically achieve nothing. You just delay the emission reduction. And that's one strong point of the carbon credits for e-mobility. They don't have that issue, because every liter of fuel that you've avoided basically leads to a certain amount of grams of CO2, which you have not released into the atmosphere, and that is permanent. So in that sense, the emission reduction from e-mobility are quite valuable. The main issue for e-mobility is the issue of the additionality. So I'll spend a minute on that. And that's because even though everybody understands that electric mobility is coming, the question is, how do you demonstrate that the activity would not have occurred if the carbon credit was not there? And you need to be able to show that it is in addition to what's being done already. You're just not following the market, so you need to be ahead of the curve, if you like. The way we do that in the world of mobility, according to the approved methodologies, is that you look at the share of sales that are electric for a particular category of vehicles within a particular jurisdiction. So if your vehicle sales are already electric for less than 5% for a particular category and a particular country, then we assume that this is additional because it's a new activity. If you're above that threshold, you're already in the realm of business as usual. So that means that, for instance, for certain types of small size vehicle, two-wheelers, three-wheelers, in some markets, you're already at 30–50% sales which are electric. You won't be able to claim carbon credit for those. You're already too late. So that's important to understand why the time is now and not once e-mobility is already a factor of life in your country. This is a mechanism that rewards the front runners, if you like. Uniqueness, that's basically making sure that there's no double counting of the credits between two players that are involved in the project or across two standards. Carbon credits and financing of your fleet. Now we're diving really into how does that translate into benefits for the e-mobility industry. The main thing to understand is that carbon credits are a source of revenues. They are not a financing mechanism. So they are not upfront money. However, as any normal source of future revenues, if you can prove to a credit entity or to a lender that the source of revenues is valuable, is permanent, is credible. For instance, if you have signed a long-term offtake agreement with a buyer that is credible, then you can translate that into upfront cash and raise money on the back of this future stream of cash flows. So there are ways to turn your future stream of revenues generated by carbon credits into upfront money, which helps you finance typically the difference in total cost of ownership between the electric vehicle and the equivalent internal combustion engine vehicle. Who can claim carbon credits? Basically anybody that is involved in e-mobility closely or remotely. So that can be owners, operators, manufacturers, and all the players involved in the entire value chain. What's important is that you must be able to demonstrate that you earn the carbon credits to avoid the double counting and make sure we respect the principle of uniqueness. So if you're not the natural owner and operator of the vehicle, if you're, for instance, the financier, the leasing company, or the dealer, you can still claim carbon credits, but you need to include a clause in your agreement with the person that will subsequently own or operate the vehicle that says that the emission reductions remain with you. And then that is sufficient for you to go and secure the carbon credits, which is an additional source of revenues for you. And hopefully the idea, obviously, is that you can translate that into further discount on your prices, or a lower interest rate when you're a lender, etc. So ultimately, it doesn't really matter who captures the benefit in the value chain. What's important is that it is clear who has the right. And obviously, it becomes a commercial negotiation between the parties on how does that translate into the commercial agreements that you have. In terms of assets, pretty simple. If you see something driving around, floating around, it's currently running on fossil fuels, and you think it can be converted to electric, then the electric version is most likely eligible for carbon credits. What is required? So in the world of e-mobility, we are lucky that the requirements are not too onerous in terms of monitoring and reporting. I've already explained the issue of ownership of the emission reductions, but for the monitoring, reporting, and verification, the only thing you need is basically a unique identifier for each vehicle that is covered or each charge point. And you need to be able to track your mileage, or in the case of charge points, the kilowatt hour that you're selling. This is typically not an issue at all because most of those assets are connected. So you have a dashboard, you can see in real time where your vehicles are, how much you're driving. And it's just a matter of producing an extract from that system on an annual basis, which is then verified by an auditor. Important caveats: only the assets that are purchased after the program registration can be included. And that is because you need to be able to meet that additionality criteria. So we see a lot of people coming to us and saying, hey, I'm operating this fleet of 100 electric buses. I've been focusing on the operational aspects. Now it's all running fine. How can I now monetize my emission reductions? And then we have to disappoint those potential customers because you are already too late. If your e-bus is already driving on the road, you cannot prove that you need the carbon credits to realize that activity. So it's very important if you want to be able to tap that into that additional source of revenues, that you think about it before you make the investment decision. I'll wrap it up with a series of illustrated examples of what that can translate into in terms of basically additional source of revenues for operators, owners, and financiers of vehicles. So for an electric bus in an urban setting, you're typically talking about $3,000 per year. So over a 10-year period, you're talking about $30,000. So it's not going to turn your business plan on its head, but it's really not insignificant source of additional revenues, and the purpose is really to help you bridge the gap between the cost of electric versus the cost of ICE. So that's for a fleet of 100 buses, you're talking a couple million USD already of revenues over the entire lifetime of the project, which is significant. Electric trucks, maybe about 20,000 during the lifespan of the bus. You can apply it for motorcycles and three-wheelers. So obviously the equivalent in diesel or petrol consumes much less petrol. So you need many more vehicles to make it worth your while, your investment into a carbon credit program. Public charging infrastructure. So typically that is not going to generate a lot of revenues at the beginning because the adoption of EVs on the entire market is quite low. So the usage rate will be also very low. But as you move along and as EV adoption accelerates, public charging infrastructure can generate quite a lot of revenues. It's just spread over time. This is a bit of another category, but anything that has to do with rail, trams, metros, LRT, even high-speed rail is eligible. The methodologies are slightly different. You need to be able to demonstrate that there is a modal shift or that you've done something to the engine to improve the efficiency and reduce the consumption of electricity. But there is something you can do to that. There's been high-speed rail lines in Korea that have managed to secure carbon credits, metros in India, trams in Tunisia. So this is something that is also an option. Mining, so the full range of vehicles that I use in a mining context, trucks, dumpers, staff, transportation vehicles, equipment for ports and logistics, trucks, container handling, straddle carriers, etc., cranes, ground support equipment for airports, vessels. So you see that's just an illustration of everything that is possible, and you can see there's a lot of possibilities out there. I'm going to stop here and give the floor back to Tom. Potential questions.
Thank you so much, Guillaume, for a super informative presentation. It's interesting to hear that carbon markets remain immature and that e-mobility doesn't yet really feature much within them. So huge opportunity there, one would expect. And we'll also keep our eyes peeled for the ITMO market over the years ahead. I'm pleased to say that there are very many questions coming in from the audience, so I'll try and speak very little and get as many of them in as we can. So to kick things off, Robert asks, I mean, some of these were posted some time ago, so there's a chance that you may have answered some of these during the course of your presentation, Guillaume. But Robert asks, is where we produce the CO2 savings allowed to be traded on any of the global markets? And then he follows up with, if we produce CO2 savings in a country that is not registered on any regulated market forum, are there any constraints to where we can trade our credits?
Yes, there are definitely constraints. So a big part of the exercise is to understand which market you're targeting, because then you're going to structure your program and your methodology in a certain way to meet the requirements of your putative buyer. So if you're in a country which has a national system in place, you can trade into that market. Note that transportation is seldom regulated. In most national credit markets, the regulated sectors are heavy industry, sometimes electricity generation, but there are very little countries which allow carbon credits from e-mobility to be traded in exchange for paying your carbon tax when you're operating a smelter plant, for instance, right? So not a lot of possibilities out there on your national markets. On the international markets, If you are lucky enough that your country has already entered into Article 6 activities under the Paris Agreement, that is most likely your best way to secure substantial revenues from carbon credits, because the prices are much higher. Unfortunately, very few countries have already entered into that market. And let me delve a little bit into the details here of what the Paris Agreement says. There are actually two aspects to it. There's Article 6.2, which relates to bilateral transactions between two countries. And that's basically a market whereby two countries have already signed a bilateral deal with each other and agreed that they will exchange carbon credits. There's only a handful of buyers out there which have entered into such bilateral agreements. So you're talking Switzerland, you're talking Sweden, Norway, Singapore, Japan, South Korea. I may be forgetting one or two, but that's pretty much it. Australia, I think, is also on the list. So if your country has signed a bilateral agreement with one of those buyers, then it's quite interesting to look into what's included in this bilateral agreement. What you'll find is that very often you can do projects in e-mobility, but in certain countries, you have negative lists of sectors which are not allowed for trading under Paris Agreement. For instance, if you take India, electric vehicles are not part of the positive list. So they're not allowed. You cannot trade internationally carbon credits from electric mobility. And you have negative list, sort of exclusion list sometimes. So you have, if you take a country like Chile, for instance, where we're developing a program currently, you can do e-mobility activities in Chile, which already has a bilateral agreement with Switzerland. But you cannot do urban transportation buses within the metropolitan area of Santiago, because that is considered business as usual. And that's an activity that Chile has already promised to do under the Paris Agreement. So it's not additional. So you really have to look into the details of the nationally determined contribution of your country and see whether the activity that you're proposing is on top of what is unconditionally committed by your government. So that's the Article 6.2. Article 6.4 is a multilateral trading platform, which will be put in place under the aegis of the UNFCCC. And it will basically be your international marketplace where all the countries can trade their carbon credits. Obviously, each country, again, has the right to put their own rules on what sectors they open or close for business. The unfortunate part is that this Article 6.4 is not yet operational. And that's going to be one of the main themes that is going to be discussed at the Baku conference in November. So we're hoping to get a bit more clarity after that. But you can see it's a new space and the rules are changing. There's a lot of unknowns. If you already have a bilateral agreement with one of the countries that I named before, then explore that, because that's probably your best ally to get good value for your credit. If you don't, apologies for the long answer, but it's just a bit complicated. If you don't, then probably your best option at the moment is the voluntary market. So you could already trade under the voluntary market. The rules are not fundamentally different. You actually have a bit less hoops to jump through because you're not committed to the nationally determined contribution of your host country, but the prices will be much lower. So for e-mobility, if you're lucky, you can target maybe $15, $20. We've heard of deals that have secured better prices, 30, 40, but typically for small scale. So you have a buyer that's really interested in your story. They see all the benefits and they want to sell the story also on top of the actual emission reductions. That helps in selling your case. But it's on the voluntary market. What you have to understand is you're selling emission reduction, but you're also selling all the social benefits and the story that goes with it, because obviously the buyer wants to make use of that for communication, for proving that it's doing good for the world, etc.
Thank you. Thanks so much, Guillaume. We really do have so many questions coming in, which highlights the just the interest in this topic and in your webinar. So if I may just move through and take a few more of them. Lloyd asks, if a project is already approved by ADB with e-buses, does this mean that the project would fail additionality? I guess that's in relation to how additionality is calculated and demonstrating that it wouldn't have been achieved anyway.
Right. Hello, Lloyd. I think we know each other. So the question is when the investment decision is made and when in relation to when the program is registered. So you need to have already passed the first stage of registration. And then there's a bit, if I'm honest, there's a bit of unclarity in the methodologies on what the actual starting point is, whether it's the moment the bus hits the road, whether it's the moment the purchase contract for the buses is signed, whether it's the moment the first bus is delivered, or whether it's the moment you have secured the financing. I think there's a bit of leeway here. So if you have already secured ADB financing for a particular project, if you still haven't signed the purchase agreement for the buses, I would say you're still on time. And also, I need to add, there are subtleties again, depending on where you're selling. So some buyers are more flexible than others. According to some of the standards, you can also look 2 years backwards. So on the voluntary market, if you're doing it under Vera, Vera will accept to certify projects which have been put in place over the last 2 years. So you can retroactively get credits for projects which you have put in place over the last 2 years. But if you don't want to take the risk, I would say think about it as early as possible, especially if you're targeting the slightly more stringent ITMO market, which pay better prices.
Thanks, Guillaume. And forgive me, Angel asks, how is fraud policed in the different markets? Which are the relevant authorities and how is this prosecuted? In the EU ETS, there have been different scandals popping up along the years, most recently in Bulgaria.
Sorry, I missed the beginning of the question. Can you just repeat the first sentence?
So how is fraud policed in the different markets? Which are the relevant authorities and how is this prosecuted?
Right. The honest answer is it's still a bit of a jungle out there, especially on the voluntary market. There's been a lot of scandals specifically on the voluntary market recently. Some studies from the Guardians which have studied the actual emission reductions ex post of a number of projects have concluded that 90% of forest preservation projects were actually not generating any benefit whatsoever. Fortunately, in the world of mobility, we have a bit less issues with credibility because it's easier to demonstrate that you have avoided so many tons of fuel that you've not consumed, and therefore the associated greenhouse gas emissions have not been released into the atmosphere. As to who is the authority in charge of putting the stamp on the credits, again, it depends which market you're talking about. So if you're on a national market, there will be a national certifying entity, typically an agency under the Ministry of Environment, but it can depend. Sometimes it's a sectoral agency under energy or under industry. If you're on the voluntary market, you have a certain number of standards which have been created over the years and which are now being sort of recognized internationally. It doesn't mean those have been able to avoid all the scandals. So a lot of the methodologies are being reviewed to make sure that the emission reductions are real. And if you're talking on the ITMO market, basically any trading is possible as long as the buyer and the seller agree with each other. So you can, in theory, obviously that's not going to happen, but in theory, you could say, I purchase 100 tons from you, I pay you X, and I don't need to verify anything. There just needs to be a corresponding adjustment in your carbon registry at national level. So you'll get a plus at the seller country and a minus at the buyer country. As long as the adjustment is made properly and reported correctly to the UN, you know, it's neutral at international level. So there's no real rules on the ITMO market except than the ones that the buyer imposes on you. So those are the certifying entities. Obviously, like I said, there are a bunch of steps which you need to go through. So you need to have it certified by independent validators, which are certified by the standards that you're following. You have auditors, and what you're seeing also gradually emerging is rating entities. So you have rating entities which will come and rate your credits and give it a 3-star, 2-star, 1-star, and depending on how they think your credit is credible in terms of doing what it's supposed to do. So that will gradually become a factor, especially on the voluntary market, to convince buyers that your carbon credit deserves a higher price than your neighbors, because it has a higher rating and it's more credible.
Thanks, Guillaume. Another question. So besides e-buses and other forms of public transport, do viable methodologies exist for other forms of sustainable transport, such as pedestrian facilities, cycleways, micromobility, or parking management, in order to claim credits?
Not to my knowledge. Not to my knowledge, and it would be quite difficult to demonstrate the emission reduction in relation to a baseline. So nothing prevents you from coming up with a new methodology, submitting into a standard, and then hoping to get that methodology approved. Like I said, it's a very tedious process, which will cost you between 100,000 and 200,000 and take you 2 or 3 years. But the main issue is the calculation of the baseline. How do you demonstrate that if you do not do the activity, then people will do something else and therefore travel in another way, and it will generate more emission than if you implement your project. That's the difficulty. So for instance, we have the issue, we have some people coming to us with e-bicycles. Now, the equivalent vehicle to an e-bicycle most of the time is a bicycle. A bicycle doesn't emit anything. So when you implement an e-bicycle activity, we think it's good, but it's going to be extremely difficult for you to demonstrate that it's replacing a scooter that emits greenhouse gas. In many cases, it will be compared to a bicycle, which does not emit anything. So you're not able to prove that you're generating emission reductions.
Okay, so Kumar asks, who earned the carbon credit? Is it the one who pays for the asset or the one who runs it?
Yeah, it can be anybody, like I said. Typically, it's the one who owns and operates it. If it's not clear, then you can arrange that by contract. And if it's not clear, I strongly encourage you to arrange that by contract, because if it's not clear, it will be difficult for any of the parties to secure the carbon credits, and the two parties are basically losing on the benefits. So I encourage you, when you sell an EV, when you finance an EV, when you operate an EV, to clarify with your seller, with your financier, who actually owns that potential stream of revenues. And typically you have to think, who is the best party able to monetize it? So if you're just one operator buying 10 buses, you're going to be too small. You might as well leave the benefit to your manufacturer, who is selling thousands of buses and can aggregate all of that into a program which makes sense because it has the volumes. And that's one of the issues we encounter with e-mobility, is that most of the projects are very small. So as Zeroka, what we do is we aggregate a lot of different players from the entire e-mobility value chain spectrum of vehicles. And that's how you reach the volumes which make it interesting to the largest buyers, which are sovereign buyers.
Thank you, Guillaume. And I think we'll take one more question before wrapping up, conscious of time. Actually, there's a couple in here from Eris. So Eris asks, what organizations or firms in Asia connect carbon credits with public transport or transportation systems in general? And then follows up with, do specific funds have their own pricing schemes? For example, GCF, does it also depend on sector, and how does it look for transport?
So if you're talking about firms that specifically develop carbon credits for e-mobility, I'm not really aware of any other than Zeroka, actually. There are some carbon credit developers which are larger than us and do carbon credits also for e-mobility, but as a bigger portfolio. So they will do forest, they will do clean cook stove, and they will do also e-mobility and energy, what have you. So any of those parties can basically help you structure your program and secure your future stream of revenues. And the other part of the question was in relation to the GCF. So the GCF obviously existed before the Paris Agreement, and all the carbon credit markets became really a big thing over the recent years. The difficulty with GCF is that they haven't done a lot of transportation. The first project that they did was actually the bus rapid transit system in Karachi, which is not yet operational. That's the first they did in transport, and I think they've done one LRT or metro in Costa Rica or Central America somewhere. So they don't have a whole lot of experience in transport. They can do it, but the process is quite tedious. What's important to understand also is that the GCF sort of claims the emission reductions for the portion of the financing which they have granted to the project. And that means that for that particular portion of financing, you will not be able to generate carbon credits. Otherwise, again, that would be double counting because you have an international entity which is already claiming the emission reduction. So if 10% of your capex is funded by GCF, typically at very attractive prices, so it's still worth going for it if you have the size and the time. For that particular 10%, you won't be able to claim the carbon credits, but you can still claim carbon credits for the other 90%. So the two can be combined with each other.
Thank you, Guillaume. I'm conscious we are at our allotted time, but just, I mean, there are so many questions. I mean, we can, if you're happy to stay around and we try and take some
Sure,
more,
no problem.
we can do. Okay, I'm just conscious people may drop off, and I don't know if you've got anything booked after this. So okay, we'll stay along and sort of continue to take some more because there are just so many. Let me try and find someone who hasn't asked something so far. So okay, Zishan Youssef asks, how is mileage converted to carbon credits and what is the ratio?
Right, how do you convert it? Okay, so very simply put, you drive 10 kilometers with your electric taxi. You're going to look for the electricity consumption of your electric taxi. No, sorry. You drive 10 kilometers with your electric taxi. You are going to look for the fuel consumption of the equivalent vehicle, so a normal taxi which is powered by petrol, and you're going to say over those 10 kilometers, my normal taxi would have consumed 2 liters of fuel. I'm just saying any number. And these two these 2 liters of fuel can easily be converted. You know the chemical content of that, and when it's released, how much greenhouse gas emission is being released. So you know that for every kilometer of fuel, you have for every 10 kilometers that you've driven, you've avoided so many kilometers of fuel. Now you also need to calculate how much is the emission of your electric vehicle. And yes, it is zero at the engine level, but you also need to consider where the electricity is coming from. So if the electricity is coming from your grid, you're going to have to use the grid factor of your national grid operator. And that varies significantly between countries. So what that means is that if you are driving an electric vehicle in Indonesia, where the grid is not so very clean, you're going to have a much lower saving of emission of greenhouse gas emission than if you're driving that same kilometer over the same distance in a country like Nepal, which is mostly powered by clean renewable hydropower. So where you are will to a large extent determine how many credits you can secure. And one last point which I'd like to say on this, if you have a dedicated electricity generation facility for your chargers, so if you have, for instance, an industrial facility, you have solar on your roof, and you are powering your vehicle directly from the solar energy that you're generating, then you can, for that portion of electricity which is charged by solar, you can use a factor 0. So it is worth it to try and combine clean energy generation, if you have the space for it, with your electric mobility endeavors, specifically for operators in the logistics or industrials.
Thank you, Guillaume. And a question from Mohammed: how do you define "quote unquote" registered? is it getting registered with the government or authority?
Yes, again, it depends which market you're selling into. So if you're selling on a voluntary market, registered is registered with the standards that you have retained. So there's like 3, 4, 5 main standards that you're going to go to: the gold standard, the VCS Vera standard. If you're doing it under Paris Agreement Article 6, registered means you have gotten it approved by both governments that are part of the transaction. So you typically have an entity within the buyer government which is in charge of buying the credits all around the world. It can be directly a ministry, or it can be a fund, it can be an association which is mandated by the government to act on its behalf. And on the seller side, your host country, typically it will be it's basically the designated entity under the Paris Agreement, which is often your Ministry of Environment. Note that there are questions at the moment about whether the registering entity at the host country level should be able to charge anything for the issuance of the credit. Obviously, the purpose is for the monies of the carbon credit to go to the actual entity that is implementing the activity, which is often an operator or private sector entity, and not the government. But there are discussions, because obviously government will also want to be compensated for the additional obligation which they put on themselves by setting out the ITMOs. If they're setting out the ITMOs, it basically means they're increasing the targets which you need to reach. So even though the targets for emerging markets are typically easier to achieve, that is still an additional obligation. And for governments, they really need to think about what am I allowing for sale? What am I not allowing? Because if you're selling all the low-hanging fruits and the easy projects, you're left with the hard ones to do. And that's going to be more difficult to meet your objectives for 2030 and come back to your to the other parties of the Paris Agreement and explain what you've done. So you really need to think carefully about what you're selling and why you're doing it and what's your strategy.
Thanks, Guillaume. So another question from Hazim, who asks, are there any ongoing carbon credit programs specifically for e-mobility in the logistics sector that you can describe?
Yes, so we are opening a number of carbon credit programs for e-mobility, which are open to any players in the e-mobility value chain. So that also concerns logistics. So there is one which is already running in the small country of Dominica in the Caribbean. But we are currently opening one in Chile, in Uruguay, and we have also Thailand, Vietnam. We're actively prospecting in most large markets, so in Nepal and Bangladesh and Indonesia, Philippines, Pakistan. Yeah, so we are actively registering such countries, such programs. And we do it always at national level, and we make sure that they are open to urban transport, passenger transport, logistics, etc. So if you fall into one of those markets, you are eligible. If you are in a very small market, the main issue is to get the volumes which make it worth it for anybody, being you or a third party, to register a program. So it's easier when you're in a larger market, obviously.
Thanks, Guillaume. So Vicente, who's from the Philippines, asks, as an e-transport entity, can we use the future carbon credits as our equity from DBP or LBP Green Loan?
You'd have to clarify for me what DBP and DBP Green Loan.
I think DBP is Development Bank of the Philippines. LBP, I'm not
Oh,
sure.
right, yes.
We can bring Vicente in if useful to clarify.
Right. I mean, again, no, carbon credits are not. They're not hard cash. They're not upfront finance. They're not equity or debt. They are a future source of income. So they are a future flow of revenues, just like when you're selling tickets for passenger fares, or when you're selling advertising space. You have the promise of future revenues, but the revenue is not there yet, right? This being said, if your future revenue flow is credible and you have an offtake agreement in place with a country that is AAA rated like Switzerland, then that future stream of revenues has value, and you will find people who are able to give you money upfront in exchange for the future stream of revenues, or money upfront backed up by that future stream of revenues. So you go into the standard realm of project finance and lending, and proving the credibility of the revenue stream to be able to raise finance on the back of that.
Thanks, Guillaume. And again, conscious time, we're moving towards the top of the hour. So I'll take one final set of questions from Robert. So Robert asks, once our project is approved and we exponentially increase our fleet size, do we have to re-register if our EV technology changes in reference to, say, battery efficiency, motor and controller efficiency?
No, you don't, unless you're talking about a different vehicle category. When you join a program, you have to demonstrate the additionality and what have you at the beginning, and then you can pile on as many vehicles as you want for the crediting period of 10 years. So unless you have a very substantial change in the way it's functioning, it's not going to make much of a difference, because the alternative vehicle will always remain the ICE vehicle.
Okay, and Robert also asks, how much of the market quoted price is taken up by fees, commissions, legal costs, etc.?
I cannot say what others are charging. For Zeroka, we are charging between 15 and 25%, depending on volumes. And the reason we're able to achieve that is because we aggregate volumes from a lot of different players. So at the end of the day, it becomes a volume play, because you need the sufficient volumes to justify the initial investment in the program. So typically, I mean, we are quite optimistic about how e-mobility is going to take off in most emerging markets. So we'll go in early. We won't make money for the first 2, 3, 4 years. We just take for our own account all the cost and time required to set up the program. And then we hope to secure enough customers and clients to reach the volumes which justify the initial investment. But we make that our problem, and basically participants don't have a single cent to disburse. Now, you have other models, so some other players might want to charge you upfront, and then you keep the entire stream of revenues. We do it on a success fee basis, if you like. But yeah, 15, 25%, depending on volume. So for the larger players, you can go into 12.5, 15%.
Okay, thanks, Guillaume. And finally, are there any credit schemes for the eradication of methane or hydrocarbons?
Eradication of methane, so you're talking carbon capture, I suppose. Yeah, I don't know who asked the question, but basically, yes, there are dozens and dozens of methodologies out there which have been approved by the various standards in complete different in a big range of sectors. So there are a lot of methodologies in relation to methane capture and that sort of things. So I think you're talking about probably capturing the biogas from agriculture or that sort of thing. Yes, there are methodologies for that. They are typically quite costly to implement. The main issue is always the time required to establish the baseline and then monitor the actual performance in accordance with the deadline, with the baseline. The beautiful thing about e-mobility is, as long as you track the mileage or your kilowatt hour, that's basically what you need to do. So it's quite easy to monitor. Some other categories of projects are much more difficult and onerous to monitor. So again, it becomes a question of volumes versus effort and initial investments.
Okay, thank you so much, Guillaume. And I think we'll leave it there as we're approaching the top of the hour. But I'd just like to extend a huge thank you to joining us today and for presenting to our community. It's been, I think, one of our most engaging sessions certainly in terms of the number of questions that have come through from the audience, and also a big thank you to those who have listened and stayed on to listen and pose questions. And we haven't quite managed to get through them all, but I'm wondering, maybe again, if we can send them to you afterwards. Maybe you can respond to people in your own time. That's probably the best way of doing it.
Yeah, or feel free to reach out directly if you have any particular case you want to discuss. That's not a problem. Yeah.
Super. Okay. Fantastic. And just for information, a recording of this session will be shared around with all registered participants after session as soon as it's available. And we hope to see everybody in a couple of weeks' time for our webinar, which will be delivered by Mr. Andy Chun on creating a sustainable e-mobility ecosystem for electric scooters in Cambodia. So that'll be taking place on the 11th of September at the same time. So thank you everybody for joining us, and I wish you a warm remainder to your day, wherever you may be. Thank you and goodbye.
Thank you, Thomas. Bye-bye.